Lifestyle banking, cash flow banking, infinite banking.
Everybody's banking.
Lifestyle banking, also known as cash flow banking or infinite banking, is a financially empowering financial strategy that allows you to control your financial future. My name is Darius.
And I'm Carmen. So by the end of this video, we are going to share with you 18 ways we have used our policies to control our cash flow and to gain wealth. So go ahead and subscribe to this channel and hit that notifications bell so you're notified every time we post new videos.
Now, when it comes to how you use or what strategy you use for your lifestyle banking, it all depends on the individual. So what we're going to share with you is what we personally have done with our policies, at least what we can think of that we've done with our policies, because over the years we've used them for a lot of different things.
Yeah. And so real quick, newsflash, if you are new to this channel, we have so many videos. We have over 400 videos about how we use life insurance to accomplish our financial goals. So if you're not understanding kind of what we're talking about, you can refer to any one of those videos. Mm-hmm. This specific video is how Darius and I have used our policies to fund our lifestyle. And so we actually have a quick little cute PDF, I must say, that Darius actually created. It's called 52 Ways to Own Your Own Lifestyle. And we'll share that in the description and you can download if you like. But the idea behind it is to get you thinking about how you can use the cash value inside your whole life insurance policy to finance the needs in your everyday life. Because a lot of times people go, Darius and Carmen, what would I use the cash for? Maybe I'm not in debt. I have other expenses. Well, we list a slew, 52 to be exact, of expenses that you could use your banking system for. And the goal behind it was you can do one once a week if you wanted to. Right. So let's go ahead and start with our first one.
So the very first thing we did, and we actually created a video on, and we talk about it a lot, is the fact that we paid off our credit cards using our system, using our life insurance policies. That's the very first thing that we did because we couldn't do anything else.
Yeah, we had to get out of debt.
We had to get out of debt first. And what that did is it unlocked hidden cash that we didn't even know that we had because we were paying all to the bank in interest. And now what we started to do is we started to receive that interest back to ourselves.
It's $2,000 a month we were spending on debt. Yeah. Mm-hmm. Yeah. It's unfortunate that we have to say that, but think about what that unloaded as far as financial freedom for us when we were paycheck to paycheck, weren't sure how everything was going to happen, and as far as creating financial future. And then once we realized we were spending so much money on debt every single month, we were like, what would that look like if we could see that again? Like that was a pay raise in itself, and we didn't even have to ask our boss for it. So we had access to more capital just because we shifted how we were paying our debt.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School.
Yeah. Now, another thing that we did is once upon a time we lived in Dominican Republic, and we came back to the States and we didn't have a car because in the Dominican Republic we didn't need one.
Yeah, we lived in the city.
So we had our daughter, we had our first child, and we needed to take her to and from her doctor's appointments or wherever we needed to go, and we needed a car. So we used our policy to buy our car, which is a Kia Sportage.
Mm-hmm. And that was really awesome too, to be able to see the flexibility in buying the car outright. We could buy whatever trim model we wanted, right? Because we didn't have to skimp on the pricing because we had the cash on hand. And we're like, we'll just have a little, meet around so that we can get around town and do what we need to do. So that was a huge transition for us to be able to buy a car cash. That was our first car purchase cash, because every time we went to the dealership, we were going to have to pay monthly payments. And I remember Dave Ramsey, he says something where it's like the difference between people who live paycheck to paycheck and the wealthy is the people who live paycheck to paycheck, they ask how much is this a month? And the people who have money ask how much is the car, and so that was like a huge moment for me to be like, all right, we're leveling up because we asked how much is the car, just in that moment, that was me. I know Darius, that wasn't for you.
Well, we still had a conversation about how much this is going to cost a month so that we can make sure we pay ourselves that money back on a monthly basis so we can recapture that plus the interest.
Yeah, of course. So side note, remember Darius always has to come with the math behind everything, right? So we sit down in the financing office and they didn't realize that we were paying cash outright. So they were getting ready to tell us the financing details, and we were just listening because we're like taking notes to go, okay, this is how much interest it costs, blah, 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 because we're figuring out how much we're going to pay our policy back because we have the cash. So it was nice to kind of have that conversation and go through that transaction to see how much the bank would charge us. And then we can, again, copy what the bank was going to do and apply that to our same policy.
Right. Another thing that we did is we paid our rent up for the year in Phoenix and Dominican Republic. Now, the benefit of that is you are able to leverage cash, and what they'll do is a lot of times you can negotiate a couple months free.
Yeah.
Or not even negotiate. As soon as you say you're going to pay your rent up for the year and you're on a new lease, they're going to give you a few free months. And what we did is we continue to maintain that same monthly payment, even though we without the discount paid it back to ourselves, because that's 2 months that a lot of people don't realize, because they just say, oh, I just moved and I'm going to because I had to buy a U-Haul or rent a U-Haul, I'm going to use that for
good point.
For the months that I have free. No, what you should do is you should realize that actual cash by paying it back to yourself. And that's what we did with our policy.
And also, spoiler alert, this doesn't always happen. We've had a lot of people say, hey, Carmen and Darius, this didn't work for me. I wasn't able to negotiate. We were just fortunate enough where we asked, do we get a discount? And the seller was open to it. So I would say always ask if there's a discount. You never know what could happen.
Another thing that we've done is we bought a condo in Dominican Republic using our cash value life insurance. This tool is something that you can really use for your benefit or to leverage, because that condo, when we're not there, we're going to be doing Airbnbs and renting it out, which is going to put money back into our pocket. Now, how much money actually came out of our account? Who's going to be replacing that money? It came out of our life insurance policy, which we use our cash as leverage to get a loan from the insurance company, and then the renters are going to pay us back. So what that allows us to do is it allows us to move money more efficiently without us having to do the heavy lifting.
Absolutely. So the next thing that we've done, which is also exciting, didn't even think we could do this until it was exposed to us, but paid our taxes using the loan inside of our cash value policy. Now, the thing behind this that's really, really nuanced is, say your tax bill is
$106,000.
Still a little salty about that. I was trying to think of a number, and then I was like, oh, Darius is going to come with it. Say it's $100,000, for example. The idea behind being able to use the cash, again, you can pay it upfront if you need to, and then you can make monthly payments or however it shakes out back to your policy plus interest. And the idea plus interest, like I said, is every time you're making interest, the principal and interest payments back to your policy, that gives you even more money to have available next year should your taxes increase. So it's always really interesting to see the different plays we can use these policies for. And we've gotten to a point where we have one policy that's specifically for taxes. Like, we just reserve it to the side because we know, taxes are going to come, and we always pay our taxes through it. That's simple.
Now, the next thing is we bought 2 mobile homes for an investment purpose. The nice thing about it is for us living in Phoenix, we were surrounded by a lot of mobile homes. So we decided to buy 2 of them and do it for sale by owner and have them pay us back 12% interest on those notes. So the benefit of that is we borrow money at a lower interest rate, and then we provide a competitive rate for how they pay their home off.
Yeah. And it makes it was a phenomenal opportunity for us, because when we started with mobile homes, we didn't have as much cash in the bank. So we were able to get into an investment at a low cost with a nice interest rate, and also being able to provide shelter, right? At the end of the day, it's about, making this work for everybody. So the mobile homes was probably one of the first investments that we did with our policies, just because we didn't have that much money on hand.
Right. The very first mobile home that we bought was like $4,200.
Yeah.
And then the repairs was just another like $1,000.
I was going to say it wasn't over 2. Yeah. So the next thing that we have, like I said, we have a list. We have 18 things. So hang tight, folks. The next thing was business funding. So we have multiple businesses, and we have used our policy, the cash, to fund our businesses for startup fees, for everyday fees, whatever the case may be. You can
contractors.
Contractors, equipment financing, furnishing, whatever
payroll,
payroll, whatever you can think of, we have used our policies for funding business expenses.
Now, another thing that we've done, because we're really organized with our income, we have different categories for how we spend our income. And what we like to do is we like to put one specific category on a credit card, which is our fixed expenses, and then we separate our flexible expenses. So because our fixed expenses is preset, what we started to do is we started to borrow money from our policy every quarter, and then use it to pay off our credit card, and then pay the money back to the insurance company with the interest that we would have paid on our credit card.
Yeah. And the idea behind the fixed expenses is things that are predictable. We know roughly how much we're going to pay in like electricity. We know roughly how much we'll pay in all of our utility bills. So we just did that math and tried to figure out how much it would be for the quarter, pay for the quarter up front, and then we take our income, pay that back to the policy plus interest, and then rinse and repeat.
Right. We know exactly how much we're going to pay on our electric bill because we also used our policies to buy solar panels for our home.
Yeah. We've also used, we did a small experiment with dining out where we ate out using the cash from our policy, paid ourselves back principal and interest. I mean, obviously you can use the cash for whatever, but the idea again is how are you paying the money back, and are you paying the money back so that you can continue to keep your money in motion?
Another thing that we use is we use it to pay for vacations. Carmen and I, we love to travel. I mean, hence we lived in Dominican Republic for a year, and while we were in Dominican Republic, we traveled to 12 different countries in 12 months. Traveling is something that's very near and dear to our heart. So what we did is we used our policy for our travel purposes, and everything that we put on the credit card, we paid it off, and then we paid it back to the insurance company, principal and interest.
The next one that we've used policies for, I think we're on 12 or 13, is new windows for our house. So again, going back to looking at the financing, how much would it cost? We knew that at some point we were going to have to replace the windows on our house anyway.
There was one window that was a little foggy that the hydrogen came out of, or whatever they put in windows, that came out. But we had to replace all the windows because it's a 20-year-old house. So that was 38 windows that we replaced, and I only saw one that had a problem.
But nonetheless, we paid the money back and it worked. You can tell Darius wasn't that excited about that deal. You want to talk about the solar panels?
No, I mean, the solar panels make sense.
The windows didn't.
So moving on to the next point.
It's all energy efficient. Okay, moving on. We said vacations. Oh, peer-to-peer lending. That's a big one that we talk about is, anyone that you know that is probably financing something elsewhere, see if you can work out a deal with them where maybe you can save them on interest, and everybody, it's beneficial for everyone else. So we have done peer-to-peer lending for someone to buy a car, for people who just need cash, for example, or just, investing purposes. So the peer-to-peer lending is one of our favorite opportunities because, again, we're helping people and everyone's winning. Peer-to-peer
lending probably is the easiest thing to do, but the hardest thing to find people to do, because when you have a personal connection with people, they think you saying a bad word by saying you're going to charge them interest. You're going to charge me interest? Well, the thing that I try to get across when we come with that is somebody that we're not going to give money to anymore.
How do you handle that, Darius?
Is you have to have them realize that their money comes at a cost. And money that you're not using, it's costing you money because of inflation. So even if you borrow money and you pay them back just the money that they borrowed, you still taking that money away from them, and they lost the opportunity to earn money on that money. So there's still a cost to it.
No, I hear you all day long. But, a lot of times people aren't willing to hear that.
Right.
Because they just think that you should just give them money.
Right. They should go to the bank and tell them to give them money. They got all the money, right?
All right. The next one is preschool. Again, we saw the cost for preschool. We said, is the money in the account? Let's pay it up. What's the discount? 5%. Okay.
I'll take it.
We'll take it.
I take any type of discount of interest I get because of the cost in which I'm borrowing money.
Yeah.
When you start using this system, what you'll start to understand is as you accumulate interest on top of interest, and that money compounds, or they artificially compound because it's interest on our credit cards, interest on our car note, interest on our taxes, interest on the mobile home investments that we're getting. That's interest on top of interest. I can afford to lend money at 0% interest and still earn money. So that 5% difference that I get when paying for my daughter's preschool up for the year, that's still more money that goes to building my system, even though it seems like that percentage is small.
100%.
What we have to do is we really have to respect the interest that we earn rather than focusing on the cash, because that interest is the language that the banks use. How much interest are you going to use? How are you going to pay? Not how much cash you're going to pay. How much interest are you going to pay?
How much you going to pay me? That's what they need to know. I like that. The very different perspective shift. Okay, so the next one just revolves around real estate. Like we said, we've purchased a condo for investment purposes. We have invested in commercial real estate.
A warehouse in Idaho.
Yeah, that was a pooled deal. So we put our money into the pot. And then we've done several fix and flips. Just
we
using
made like 15% interest on that deal in less than a year.
Yeah, that was a Hail Mary deal. Yeah, any Hail Mary deals out there, give us a call. And then fix and flips. So I can't remember offhand how many fix and flips we've done using our policy, but it's more than 2. So the idea would be, again, if you have cash, you can use it for anything. And remember, all of these things that we listed, we talked about 18 different things today, folks, is a lot of them isn't even debt. The very first thing was debt, because I think sometimes a lot of people just can't wrap their head around, hey, Darius Carmen, I don't have debt. What would I use this for? Do you eat out? Yeah. Do you have fixed expenses? Yeah. Do you need windows on your house or tint windows, whatever you need to do? Do you have preschool expenses? Do you have education expenses? The idea is expenses. Did you hear that? Expenses, right? So how can you...
investments? Because
But before that, that's what I'm saying. Like, people can't wrap their heads around, if I don't have debt and I don't want, or I'm not comfortable investing, what do I use this thing for?
Yeah, if money's coming out of your pocket, then you have an opportunity to make money from it.
Yeah, you have to get it back. That's the point that I'm trying to say, is if you have money, if you are spending money on a daily basis, how can you redirect those funds where you can keep more of it in your pocket? That's the idea. And we wanted to share this information with you because we continue to see the confusion in the comments. We continue to see the confusion in emails and in our community. So we just wanted to kind of lay it out to give you all different perspective. If you have money in your policy and you're spending money this way, meaning it's leaving you, maybe start looking at your policy so you can keep it in a closed system.
Right. And I think some of the confusion comes when people look at how other people use it and try to apply that to their lifestyle when it's our lifestyle. You need to look at its foundation and make it very simple for yourself, and understand that every time you pay money, you're giving somebody, you're paying somebody a profit. So if you're paying somebody a profit, especially if that includes interest, you have an opportunity to use somebody else's money and then use your money to pay yourself back, or pay that difference plus the interest that you would have paid to somebody else.
Yeah, and it goes back to programming. Kind of what you were touching base on is we have to understand that we are right now programmed to just spend money. If it's a check, if it's a debit card, if it's a credit card, we're just conditioned to spend, and we're just okay with not getting access to the money again, right? That's just what we're conditioned to do. So there's other ways, folks. And if you would like to know, then definitely click on our next video so you can understand the processes of this concept that is called infinite banking. And remember to own your own lifestyle.
Or someone else will.